Well, hi there. So in this video, we're going to do some extra practice related to trade, international trade, balance of payments of accounts, and a little bit of comparative advantage. Let's get started. Okay, so first off, before we get into this too much, I actually made kind of a little bit of an error just in how I asked some of these questions. And so number 7 and number 8 are not quite what I wanted them to be, but certainly we're going to work with what we've got. So let's get started. Calculate the opportunity cost of producing 1 unit of wheat in Mexico. I'm actually just going to calculate all of them. We're going to do 1 wheat, and then 40 over 240 is 1/6 of a lumber. 1 wheat here, 25 over 100 is 1/4 of a lumber, which tells me Mexico has comparative advantage in wheat. 1 lumber for Mexico is equal to 240 over 40, which is 6 wheat. And 1 lumber here is equal to that reciprocal, which is 4, meaning that Guatemala has it in comparative advantage in lumber. Opportunity cost of 1 wheat in Mexico is 1/6 of a lumber. And it is important that we define it as lumber. If we just leave it as 1/6, we're not actually answering this question. Number 2, which country has the absolute advantage in wheat? Well, that's going to be Mexico. And our explanation is because 240 is bigger than 100. That's just the output values. If the two countries specialize in trade, who's going to produce the wheat or export the wheat? That's also Mexico. And this is the part where I was kind of talking about a moment ago. I flipped these numbers, and I really actually wanted it to be the other way around. But no big deal. Mexico has comparative advantage here because 1/6 lumber is less than 1/4 lumber. That's enough of us to say that they have the comparative advantage in that particular production. What's the minimum price they would accept for their 1 wheat? Well, it's the lowest thing that they've got here, that 1/6. It's their 1/6 lumber. So that's where I'm getting the duplicative nature of these things. I didn't mean to do that. But it is just that's the lowest they would take, right, is the opportunity cost of producing it. If they produced and specialized in trade, who should export the lumber? Well, that's going to be Guatemala. And the explanation here is because 4 wheat is less than 6 wheat. And so they have comparative advantage in the production of lumber. What's the minimum price they would accept for 1 lumber? Well, it's that 4 wheat. They won't do it for anything less than that because that's their opportunity cost of making it. Suppose a negotiator produces 1 wheat for 2 lumber. 1 wheat for 2 lumber. Well, that's way outside the boundary of 1/6 to 1/4. And no, they would not. No, not both. We would say only Mexico benefits. Now, the explanation is what matters here because it's above Mexico's minimum price of, what do we got? So 2 lumber of 1/6 lumber, but it's also above Guatemala's maximum price of, what do we got? 1/4 lumber. And so it's really just saying that this offer of 2 lumber, right, is above that 1/6, but it's unfortunately above Guatemala's maximum price. So we would say only Mexico benefits, but not Guatemala. Why would Mexico not benefit from 1 wheat for 6 lumber? It actually would, right? It would benefit. It would benefit. And so that's my mistake, right? That's my error on this one. My bad. Sorry about that. And again, that's because, I flipped the numbers when I actually wrote the table out. There's a couple of changes I also want to make on this set. You can see that I was doing this in a hurry and I shouldn't have. These inflows or outflows in the current account of the financial account for the U.S., right? For the USA. And so a U.S. company exports cars to Germany. That's going to be an inflow on the current account. American tourist spends money on a vacation to Japan. That's going to be an outflow because money's flowing out of the United States, also on a current account because we're buying stuff. German bank lends money to a U.S. corporation, inflow, but that's a financial asset. So it's the financial account. Chinese company buys real estate in New York, inflow on the financial account. Foreign company sells off treasury bonds. This one I'm not a huge fan. I'm going to cross that one out. Don't worry about it. U.S. government sends foreign aid to a developing country. That's an outflow. Money's flowing out of the United States on the current account because it's transfer or remittance. A Mexican worker in the U.S. sends remittances back home. So again, this is another outflow and it's the same type, current account. Canadian investor earns dividends from U.S. stocks. This is an outflow because the money's flowing from the U.S. to Canada, and it's on the current account because income, right? It's dividend income. And a U.S. investor buys shares in a European company. We would say that that's also an outflow, but this one's on the financial account because it's a financial asset. Let's take a look at these multiple choice that'll appear on your quiz. Number one, a country can have an increased surplus in the balance of trade. So this is really just saying, let me zoom in just to show you. This is really just saying that they have a trade surplus. And what would lead to a trade surplus is declining imports and rising exports, right? So this is not the same. Balance of trade is not the same as balance of payments. Balance of trade just means like trade surplus, trade deficit. Which of the following would be a current account transaction? Not about bonds, not about stock, not about not about new real estate, not about buying money. It's about products. And so D is going to be the correct answer on that one. Number three, which of the following would increase the current account surplus in Japan's balance of payments accounts? Japanese company sells coffee to Canada. That would do it. So that's greater net exports for Japan. And so that would increase the current account surplus. Number four, which of the following transactions is recorded as a credit? That's a positive, right? That's all that means is a positive in the nation's capital and financial account. So it's really the financial account. Sale of common stock to foreign households, that would be the correct answer, right? If foreigners are buying your stock, that's an inflow on your financial account, and so it's counted as a credit. Number five, if a country has a deficit in its current account, then we know there will be a surplus in the financial account. So that's an A, that's balance of payments of the accounts. Number six, an increase in Canada's real interest rates relative to real interest rates in the rest of the world will lead to which of the following? We would expect there to be more money flowing into Canada, and we call that a financial capital inflow. That's D. Supply of loanable funds would increase. Number seven, the real interest rate in Britain increases to 8, while the equilibrium rate in Australia is at 4. As a result, the flow of capital would flow from Australia to Britain. So Australia to Britain, right? So we're going to rule out a couple of these. Australia to Britain, increasing the rate in Britain? No, it's not going to increase the rate in Britain. Australia to Britain, decreasing the rate in Britain and decreasing it? No, it's not going to decrease it in Australia. It's going to decrease the rate in Britain and increase the rate in Australia. E is our correct answer. Number 8, a farmer in country A can harvest 20 bushels of wheat or 10 bushels of corn. Country A, country B, who should make what? So we're going to make a quick little graph over here, and we've got country A and B, and we've got corn, and we've got wheat. And we said A can do 20 wheat or 10 corn, and B can do 8 wheat or 8 corn. And so who has comparative advantage in what? Well, we know B has it in corn, A has it in wheat. I'm doing the cross multiplying kind of directional side to just know they have comparative advantage. You could look at it and figure out the opportunity cost if you'd like. So A should export the wheat, B should export the corn. Country A will export wheat and import corn. A is our correct answer on that one. And then last but not least, Stefan and Donna, they make orange juice and canvases, which is weird, weirdos. Sorry. They show this, which of the following terms of trade would be mutually beneficial? So 1 OJ is equal to 30 over 40. That's 3/4 of a canvas. 1 OJ here is 10 over 20. That's 1/2 of a canvas. So Donna should make orange juice. We know that. And then for Stefan, 1 canvas is 40 over 30. That's 1 1/3 OJ. 1 canvas, 20 over 10, is 2 OJ. So Stefan should make canvases. Now, what would be beneficial? 1 canvas, we've got this column. So we're going to look in the 1 canvas column. And it's going to be a number between 1 1/3 OJ and 2 OJ. So we're going to say nope, 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 boom. D is the right answer. 1.5 is in between those two. Hopefully this helped you with 10.1 extra practice. I'll see you next time.